Hello everyone and welcome to this week's edition of Financial Intelligence. A disclaimer before we get started. Note that we're not financial advisors. The content in this video is for educational purposes only. For professional advice, you should talk to your financial advisor. As you may know, Tesla has had a huge run over the past few months, and the current price in May of 2021 is around $650. It is incredible that people are still buying Tesla at these price levels. Of course, Tesla could still go higher, but I think that it is highly overvalued. I came up with the idea of creating this video to put these unbelievably high evaluations into perspective. In this video, I'm going to be talking about, number one, what the PE ratio is and how we can use it to identify overvalued companies. Number two, use a real estate example to show you how overvalued Tesla is. And number three, address one of the common counter arguments people make to justify investing in Tesla. Using the PE ratio to identify overvalued companies. In the world of investments, a company's price to earnings ratio or PE ratio is the measure of a stock price relative to its earnings. This ratio is a metric that helps investors determine the market value of a stock compared to the company's earnings. In other words, it demonstrates how much they are willing to pay for $1 worth of earnings from a given company. This ratio was popularized by the late Benjamin Graham, who, aside from being Warren Buffett's mentor, is credited with inventing value investing. Graham preached the virtue of this financial ratio as one of the quickest and easiest ways to determine if a stock is trading on an investment or speculative basis. A high PE ratio could mean that a stock's price is expensive relative to earnings and possibly overvalued. Currently, the average PE ratio is roughly about 23 for companies in the S&P 500 index. In other words, investors are willing to invest on average $23 to earn $1 at the end of the year. Obviously, the PE ratio differs from company to company and from sector to sector. Some companies have higher PE ratios because investors expect or speculate that those companies have unrealized earning potentials and are going to generate higher cash flows in the future. In general, PE ratios higher than 100 are considered pretty expensive. This brings us to the main point of this video. So what is the PE ratio of Tesla? At the time of recording this video, Tesla is trading at about $650 per share. Tesla's quarterly earnings per share, or EPS, in Q1 of 21 was about 28 cents. If we annualize that quarterly number, the annual earning per share for Tesla is about $1.12. Therefore, the PE ratio of Tesla is roughly $650 divided by $1.12, which is around 600. This is huge. In other words, Tesla investors are willing to pay $600 to earn only $1 at the end of the year. Compare this to the average PE ratio of S&P 500 companies, which is only 23. The PE ratio of Tesla is 26 times of the average PE ratio of S&P 500 companies. It is actually crazy high. Rental property example. To put this into perspective, I wanted to compare Tesla to a more tangible case of investing, such as purchasing a rental property. I think Tesla's really high evaluations would become even more apparent if we translated Tesla's crazy PE ratio to the world of real estate investment. In the case of real estate investing, you can calculate the PE ratio of your investment by dividing the price you pay for the rental property by its annual rental earnings. Let's consider a basic example. A typical single-bedroom apartment in the US generates about $1,000 in rental income per month, or $12,000 per year. I've included some pictures from a typical property in the area that I live in to give you an idea of what type of property we are talking about. Let's assume a simplistic scenario where during the year we'll spend $2,000 for maintenance, taxes, and other costs in this example. This means that we will end up with a net income or earning of $10,000 at the end of the year for this property. How much are you willing to pay for this property to make $10,000 annually? Experienced real estate investors would be willing to pay about 20 times the earnings for this property. In other words, the industry standard for the PE ratio of a real estate rental property is about 20. So an experienced real estate investor would be willing to pay $200,000 in cash for this property in order to generate $10,000 in net profit at the end of each year. However, what if we paid the same PE ratio that Tesla investors are currently paying to buy that stock? How much would we be paying for this rental property if we were to apply the PE ratio of Tesla, which is 600? If you do the math, it turns out that we would be paying $6 million for this rental property. In reality, with $6 million, you could buy this other property shown in this image in the area that I live in. Of course, nobody in their right mind would pay $6 million to buy this investment property to make only $10,000 per year. Yet, this is exactly what Tesla investors are currently going for in the stock market. My point is to show you how high the current Tesla valuation is. It is easier to appreciate it when you consider an equivalent real estate investment example. Possible counter-arguments. One possible counter-argument that the Tesla investors can put forth is that they have invested in Tesla because they're interested in the price appreciation of the stock price and not in the amount of profits Tesla generates. In other words, the argument is that they have purchased Tesla in the hope that it would even go higher in the future. However, this is a risky proposition. It is always possible that Tesla could go even higher, but this possibility does not reduce the amount of risk associated with investing at already super overvalued prices. This argument is like saying that we are investing $6 million in a single bedroom property that generates $10,000 a year, not because of the income it generates, but because we are hoping that someone else would buy it from us at even higher prices in the future. I hope that you liked this video. If you have any feedback or suggestions, please add them in the comment section below. And don't forget to like, subscribe, and hit the notification bell so that you don't miss any of our future videos. Thank you and take care.